Well, good afternoon, everyone. Let's get started. There's still some people coming into the room, but they'll be able to catch up with us. Welcome, everyone, and thank you for joining us today for our last webinar before we take a break for the summer. I'm Sonja Hodis, and I'm your moderator as well as the condo lawyer. And joining me today, we have four very well-known individuals who work in the insurance field and who are very knowledgeable when it comes to insurance and condos. Joining me today is Tom Gallinger from Atrons Council Insurance Brokers, Tricia Baratta from Gallinger Insurance Brokers, Sandy Fantino from BFL Canada, and Chris DiPietro from Select Path Insurance. We are going to end our winter spring series with a discussion about insurance, and we're going to ask our experts about whether there is still an insurance crisis in Condo Land. But before we do that, we're going to ask you what you think. So I'm going to launch a poll, and it's a simple question. Is there still an insurance crisis? Yes, no, or you don't know. So tell us what you think. All right, there's the yeses are winning right now, and the no's and don't knows are neck and neck. All right, it looks like we've got most of the answers in. I'm going to give you 3 more seconds, get your answer in, and I'm going to end the poll. All right, so it looks like the yeses win. 53% of you think that there is still an insurance crisis, 17% say no, and 30% don't know. That's interesting. So let's see what our experts have to say about that. But before we do that, there's a couple of things that I need to do in terms of housekeeping, and one of those is to thank our sponsors. As you know, if you've attended any of our webinars before, you know that without the support of our sponsors, we're not able to present these webinars to you free of charge. So thank you to our sponsors. And you'll see their logos on the screen. We have Aaliyah Associates Condominium Lawyers, Nordic Windows and Doors, Select Path Insurance, BFL Canada, and Common Ground Condo Law. If you want to find out any more information about any of our sponsors, all you need to do is go to our website, cciharonia.com, click on their logo, which you'll find at the bottom of our landing page, or if you go to today's event page, you'll see their logos there as well. Click on their logo, it'll take you to their website, and you can get more information about them, their services, and their contact information. So thank you again to all of our sponsors for supporting our webinars. We can't do it without you. So today, we're going to be talking about insurance, and we're going to touch on the question, is there still an insurance crisis? We're going to ask the experts what they think, but we're also going to touch on the impact of the recent ice storm that we experienced in March 2025. And in our region, it hit us hard. Global impacts and national disaster, how that's affecting insurance. We're going to talk about aging condos. And we're also going to talk about cryptocurrency and its connection to condo insurance. So we have lots of things to talk about. There are probably going to be lots of questions coming out of this discussion. So if you do have a question, all you need to do is put them into the Q&A box. And our panel is going to try their very best to get those answered during the webinar today. So questions, put them in the Q&A box. Please don't put them in the chat box. But if you are a property manager and you're wanting to claim CMRA credits for today's webinar, make sure you get your name and company name into the chat box. And if you don't know who CCI Huronia is and you don't know who CCI is generally, let me tell you, we are the Canadian Condominium Institute, which is an independent nonprofit organization that was formed in 1982. We have chapters all across the country. We have 8 chapters in Ontario alone, and CCI Huronia is one of those Ontario chapters. Our main objective is education, but we also advocate for condos, and we represent all those involved in condos, from owners to directors to professionals, and we encourage all those stakeholders to work together. So if you're not a member of CCI Huronia or one of our sister chapters, this is a great time to join, because we are just going to be starting our new membership year on July 1st. So if you want to become a member of CCI Huronia, you can go to ccihuronia.com and click on the membership tab. If you are a new member and you're a condo corporation, we do have a special deal for you. If you are a new member and you're going to be a professional or a business partner, stay tuned for some savings and special rates that are going to be coming up very, very shortly. So if you're looking to join CCI or you're looking to renew your membership, keep an eye out on the e-blasts that are going out to find out about our special deal that's coming forward. If you want to join one of the other chapters at CCI, all you need to do is go to the national website, cci.ca, and you can find a chapter near you. While you're on that website, there is a resource center that you can access, which has a great deal of information from our chapters across the country. And it's a great resource. You can also find that resource center link on the CCI Huronia chapter website, ccihuronia.com. And if you want to follow us on social media, don't forget we are on Facebook and on Instagram. And if you want to find out what's happening in our newsletters, you can find those on our website. And we do these webinars in the spring, winter, and the fall, winter. And if you've missed any of our webinars past, you can go to our website, ccihuronia.com, click on the resource content tab, and you'll find all our past webinars there. Today's webinar is being recorded. It will be put on the website as well in 7 to 10 days. And we have a YouTube channel, the CCI Huronia YouTube channel. If you haven't subscribed to our YouTube channel, please do so. We really want to get our subscription numbers up, and you'll find all of our videos there. Make sure when you're watching our videos to give us the thumbs up, leave a comment, share those videos with anyone that you think may find them interesting. And finally, don't forget that if you are a condo director, you cannot use the protection found under Section 37 of the Act when it comes to director liability based on the information that you receive in today's webinar. The information today is general information. It's not specific to your fact situation. So if you do have questions about your specific fact situation, you do need to talk to your own professionals. And if you're watching this webinar at another date, just remember that the information in this webinar is current as of May 23rd, 2025, and any references to legislation are references to Ontario legislation. And last reminder to all the property managers, put your name and company name in the chat box so we can record your attendance for today's webinar. Okay, so we asked the audience what they thought. Is there an insurance crisis? Now let's go to the panel and ask them what they think. So Tricia, why don't you start us off? Is there still an insurance crisis?
Thanks, Sonja. Hi, everyone. I think it's safe to say that we've now come through the challenging hard market, and I know that my fellow colleagues here on the panel will agree that things have gotten a little softer lately, and we're seeing a little less rate and lower lower premiums, but also lower deductibles offered than we were seeing in the past. And that's because we have more insurance companies that are interested in writing condominium insurance. The challenge I see, and perhaps it's not a crisis yet, is that there are more insurance companies interested in writing condominium insurance, and therefore there are more brokers that are interested as well. And the danger I see coming down the road is cheaper insurance can sometimes mean not as broad coverage and not as appropriate coverage for a particular risk or for a condominium specifically. Not having the coverage that a condo corporation needs, or potentially exclusions in wordings that could come into play should a condo corporation have a loss. So I wouldn't say we're in the same crisis, but potentially trouble down the road.
All right, Tricia, thanks for that perspective. Sandy, what do you think? You're muted, Sandy.
Sorry about that. I'm going to piggyback off of what Tricia said. So basically, based on the first quarter of 2025, we don't see any serious premium fluctuations that are expected. We are noticing that the advancements in technology, AI-driven risk assessments, are helping with underwriting accuracy, claims efficiency, which means better service not only for the property managers and the policyholders, but also in helping us extract the best available premium. As Tricia said, there are more insurers, but also the reinsurance market has been pretty positive, which is helping in the softening of the market. So in my opinion, I don't think there's a serious insurance crisis. I think that we are going into a soft market, which will benefit the condo corporations and the boards.
Thanks, Sandy. And Chris, what are your thoughts?
Thank you, Sonja. Well, I've been doing this for quite a while, and I've seen the ebbs and flows along the way. Insurance companies have a tendency to change their focus constantly, and they usually react in a knee-jerk reaction. So when they find that they're no longer profitable, as we've seen in the past, they increase rates considerably. As Tricia mentioned, the market has softened somewhat. More insurance companies will quote. It brings down premiums, and then they're not profitable anymore, and then they react. So right now, I think our crisis is over, but there, excuse me, is usually one around the corner.
Always that positive view there, Chris. And Tom, last but not least, what are your thoughts? Is there still an insurance crisis?
I agree with what the other panelists have said. Actually, I was surprised to see more than 50% of the respondents saying that there still is an insurance crisis. I'm a little bit different. I don't believe really there ever was an insurance crisis necessarily, but rather a market correction. And we see that, and I know the panelists during that market correction, a lot of us were involved, whether it be with CCI Huronia or National, just talking about, what is that market correction? What's the insurance market cycle? And Chris had indicated a little bit about it there. Basically, the insurers go too low on the pricing, then the losses creep up, and then they have to increase their pricing. So, I don't think there really ever was one. I do feel it's been corrected now. And it's just important to, for policyholders to take a look at, who their insurance companies are, who they're aligning with, because, there are, we tend to see insurers that'll jump into the market with competitive pricing, and we just want to make sure they're going to be around for the long term. So that's something important to discuss with your broker.
Thanks, Tom. It's interesting to not characterize it as a crisis. It's just almost a cycle, right? The ebbs and flows. And to avoid the crisis, we can just plan for it. So if we know this is how the market goes, we can kind of plan. So thanks for those thoughts, everyone. And so let's dive into some issues that the panel has identified as sort of hot issues in insurance right now. And we're going to start off with Sandy. I'm going to come back to you, Sandy. And, we've had the recent ice storm in March 2025. It hit our area really big. Aurelia got hit, really got hit. Some people were seeing power, no power for a week. Some people had it for a day or two, no power. But, we haven't seen sort of such a natural disaster in our area probably since the tornado in Barrie a couple years ago. So
Right.
Can you give us some insight from an insurance perspective about things we should be thinking about coming out of this ice storm, how it affected condos from an insurance perspective, how it might affect us going forward?
Yes, sure. Thanks, Sonja. So the ice storm, the heavy rains, which in turn caused some flooding and ice damming, was definitely a big concern for a lot of the property managers in the Huronia area. We experienced it with them. Heavy rains, ice dam. These are all perils that our policy covers, and it's to ensure that property managers really understand what extensions their policy have in these times. So we were finding that we were getting frantic calls from property managers, and that there needed to be a plan in place. So I think as a result of what happened in March, it's a good system for property managers to really look at some risk managing tools. Some of them might be the impact of resistant roofing, regular building inspections, ensure that there's no gaps in the exterior cladding that would allow for water to surface. So the biggest one out of the heavy rains and then the freezing was the ice damming. Then ensuring that there's proper drainage, that your attic insulation and ventilation, heating cables or ice melting products, ensuring proper roofing and gutter maintenance. So I think what happens in this instance is that property managers will maybe work with their brokers and take a look at what sort of preventative measures they can have in place for any future causes. Now, what I was learning as well is that due to the number of properties that were damaged, property managers were having a hard time getting in restoration, landscaping companies. There was a lot of downed trees. Some of the questions we were getting from property managers was, some trees and landscaping on our side of the condo are now on abutting or adjacent properties. Who's responsible for that? In the end, the condo corporation is responsible for any sort of trees or any damage that sort of is caused by the corporation onto an adjacent property. So those were some of the things that we were seeing that was happening during the heavy rains and the ice storm and the freezing.
All right, thanks, Sandy. Let's move on to Tricia. And Tricia, can you talk more about sort of global impacts and national disasters sort of outside of our area, and how's that impacting insurance? What are we seeing these days?
Of course, thank you. So insurance is a global industry. And if you think about it, an insurance company is a business like any business, and they want to spread their risk across different regions and markets to minimize the impact of localized events. So if they operate over a large geographic area, they can balance losses in this area by gains in this area, and then they can maintain financial stability. So an insurance company that insures my condominium corporation here in Ontario is likely to insure a condominium corporation in British Columbia and another in Alberta and some in Nova Scotia. So they've spread their risk across a large space. So each geographic area has its own unique risks at varying levels. For example, in British Columbia, they have a much higher earthquake risk than we have here in Ontario, and the wildfire risk in Alberta. So we don't have the same risks, but we all seem to be insured by similar insurance companies, right? They share the risk, they spread it across the country and globally. Another way that insurance companies manage their risk and maintain financial protection is by maintaining reinsurance. And Sandy had mentioned reinsurance, which is essentially the primary insurance company. So the insurance company that insures my condominium, it has its own type of insurance, which is the reinsurance business. And if my primary insurance company experiences greater than normal losses, they're going to reach out to their reinsurance, so their insurance company, to help them with the financial hardship. Just the same way we do rely on our own insurance companies. But the reinsurance companies operate on a global scale, which means they can be impacted by a natural disaster that happens here in Canada, and it can impact the rates that they have to charge in order to recover from a giant natural disaster that they end up paying huge amounts for. So ultimately, their rates go up, then our insurance companies that insure our corporations, their rates have to go up, and then ultimately that trickles down to my condominium corporation's insurance, and my insurance price has to go up in order to, to facilitate the increase in the reinsurance. Another way our insurance is impacted by the global environment is how the natural disasters can change the way that insurance companies view us as a risk. So insurance companies rely on mapping and risk models to determine what our insurance should cost. They want to make money, and we want to be protected. So they have to decide what that risk looks like and how much it costs to insure us to protect us from that risk. So they'll have to reassess those models when natural disasters occur. So the more natural disasters we have, the closer that insurance companies are going to be looking at those risk models, and they're going to say, okay, we've had lots of losses due to water. We're going to have to reassess the flood mapping. And for an example, you may have a condominium, you may be in a condominium that 5-10 years ago was never considered to be a high flood risk, but today it is, because we're getting those 1 in every 100-year storms so much more often. The likelihood of your property that may be adjacent to a waterway, the likelihood of it being impacted by flooding is higher now than it was 10, 15, 20 years ago. And we can also look at supply chain issues. If we have a natural disaster, let's say the ice storm that took place, excuse me, not the ice storm, the hailstorm that took place in Alberta in 2024 was the largest, second largest Canada has seen yet to date, only seconded by the wildfires. The supply chain quickly gets used up, right? If we have so many losses related to roofing, the insurance companies and the contractors have to go outside of that geographic area to get the materials that they need and the laborers that they need in order to complete the repairs in an urgent situation. And ultimately that costs more money. So it costs more money. The overall repairs will cost more because we have to resource things from outside of our supply chain. And it increases the cost of the losses. Therefore, we have to reach out to the reinsurers, et cetera, and it trickles down. So again, ultimately, our insurance companies work for lots of different areas and they work with, and therefore what they experience will trickle down to us here in Ontario.
Thanks, Tricia. So the wildfires that we saw in California earlier this year, how long do you think it takes before that affects us here in terms of premiums? Is that something that we're going to see within a year, or is it going to take a year or two, or how long does it usually take?
Yeah, truthfully, I don't have that answer. I would say that it's quicker than you think. And the fact that we have experienced wildfires here in Ontario, which we hadn't in ever. So we are lower on the risk for wildfires, but the more often we see them in and around, the more likely that, again, those risk maps and models are going to be changed. The costs associated with paying for the repairs to bring them back to pre-loss condition is probably likely to hit us at the next reinsurance renewal, which would be the new year.
All right. Thanks, Trish. Okay, so going from sort of natural disasters and global impacts to something that a lot of our condos are experiencing, and that's aging condos. The infrastructure is getting older, the condos are aging, and we've talked about this issue about aging condos from sort of a repair and maintenance perspective in the past. But let's go to Chris. And Chris, what are you seeing in terms of insurance and the impact of aging condos on insurance?
Well, insurance companies sometimes focus on a certain thing, and aging corporations, aging buildings are something that not all have an appetite for. Excuse me. So we find that as you narrow the focus of certain insurance companies, the premiums tend to go up. And so that's why we'll, excuse me, see a rise in rates for older condos. If I could take a second, I think I need to grab a quick glass of water.
Yeah, sure. Go ahead, Chris.
Even while Chris does that, Sonja, I don't mind just jumping in. One of the things that we saw with, obviously ton of snow load on roofs and that type of thing that happened in a lot of spots in Ontario back in February. And so as a result of that, there was a lot of ice damming, which is, basically that ice gets more so a sloped roof, townhome style condo exposure, but that ice basically gets, up under the shingles and gets in. And then when it melts, it gets in through the building envelope and causes resultant damage. And the properties where we saw the most severe damage from ice damming events were properties that were either older and had not completed roof updates and roof repairs and that type of thing. So it is something that's very real, and Chris is going to jump back in on that. But that was just a good example of where we saw, older buildings suffering more of an impact from insurable losses than say a newer building.
Yeah, thanks, Tom. Chris, are you good to go?
Yes, thanks for the save, Tom. Appreciate it. Yeah, so appropriately, we have the senior talking about aging corporations and how to be proactive. with your insurance. Now, the majority of insurance companies prefer newer corporations, as I mentioned, and those are usually between 2 to 25 years of age, seem to be the sweet spot for many of them. I say 2 to 25 rather than 1 to 25 because in the first couple of years, we have experienced water damage losses and, excuse me, we've experienced water damage losses with the newer corporations due to poor workmanship related to plumbing. And these usually occur within the first 2 years. Some insurers have a higher tolerance of up to 40 years of age. And I think this is probably in a large part to condominium corporations getting engineer reports every 3 years with their reserve fund study. So insurers feel a little bit more comfortable with an aging building when it's a condo corporation, as opposed to just a regular building that typically doesn't have anyone inspecting them. Once buildings are over 40 years of age, underwriters tend to take a much closer look at critical systems, such as electrical, plumbing, heating, and roofs. And I'll start with electrical. The 100 amp panel, breaker panel, is preferred for insurance companies. 60 amp panels make it very difficult to place coverage. And most of these have been phased out. Fuses are also an issue, and some companies will accept fuses if they are the tamper-proof S-type fuses. So if they do an inspection and they find out that there's fuses, it's not necessarily the end of the world. They may accommodate you, and many will. Aluminum wiring is a challenge for pretty much every insurer. The reason for this is DIYers will sometimes make connections to aluminum wiring with copper, and this is something that a professional needs to do, and when it's not done right, it can cause a fire. Because aluminum and copper do not mix well if not connected properly. Always, always, always have a professional do your wiring. Excuse me. Heating, this is a challenge for the older townhouse style condominiums because the furnace is typically the responsibility of the unit owner. So it's not under the control of the corporation, but the insurance companies keep asking, how old are the furnaces? That's something that the corporation typically cannot answer. It would be a great idea if they would ask unit owners to advise them of when they do updates, such as water heaters and furnaces and electrical panels. Excuse me. One would assume that unit owners change their furnace every 25 years, but that doesn't always happen. So if the board keeps track, that would be a good idea. They could even do something such as ask unit owners to just take a picture of the tag on the furnace, and that tells you the date that it was installed. For plumbing, pipes are generally not an issue because galvanized is a thing of the past. But there are some cases where we have PB or Kitech plastic plumbing lines, and they have had a disturbing failure rate. So insurance companies, if they do ask if you have Kitech plumbing in there, they may ask that it be changed. Hot water tanks are probably one of the biggest issues. People tend to replace them once they fail, and when they do fail, they may leak gradually or they may go suddenly. So those corporations that have hot water tanks in their basement next to a drain, it's not as big an issue as those that might have them on the main floor. And as you can imagine, when they're in a high rise, it's a disaster. Roofs. Roofs are usually not an issue because of, again, you have the reserve fund study that comes out and says replace the roof, and boards are usually proactive with that and have the roofs replaced in a timely manner. Never try to put off something like the roof replacement. It's better to get it done rather than have the claim. So you'll save money in the long run. Some takeaways I have is to for the older corporations, act promptly to recommendations from your reserve fund study. Insurance companies notice those corporations that are proactive, and more importantly, they notice the ones that are not. And so it can make it more difficult. It can cost you more money. As your corporation ages, you'll find that sidewalks may heave and crack. So ensure that there's no trip hazards from sinking or uneven concrete. For your parking lot driveways, repair the potholes as soon as they start to appear. And you may find that in certain areas, the pavement will sink after a rain. Notice where the water is pooling, because in the winter you can have a freeze thaw, and that's where the water will melt. And then if you have a freeze thaw, you're going to have ice in that certain area. So identify that as soon as you can and repair it. Ask your unit owners to replace their hot water tanks if they're over 12 years of age. And also ask the unit owners to test their smoke detectors annually. It might not even be a bad idea for the corporation to pick up packs of batteries and hand them out to the unit owners and say, this is the week that we're going to replace them. And that way it's a little bit more targeted. Attention to maintaining the buildings and the property will save the corporation and the unit owners money in the long run. It'll help prevent and mitigate losses, and it will also assist in the resale of the property for those who are leaving. So, looking at it and saying, I don't want to spend the money now, I'm going to be leaving. Well, the appearance of your property is very important when you go to sell. And last of all, to help mitigate losses for property managers is to ask your boards to join CCI.
Thanks, Chris, and thanks for that plug for CCI. There was a question in the Q&A about what are you recommending for hot water tanks? Are you recommending that they should be replaced by owners every 10 years?
Well, so they would like to see them replaced. Most insurance companies say 10 years. 12 seems to be acceptable. I thought, personally, myself, I thought, from experience, hot water heaters last longer than that until mine went after 9 years. So 10 years is what insurance companies say that they'd like to see replaced. If you're renting, I know that people have contacted Reliance and said, I want my hot water tank replaced at 10 years. When you're in a high-rise building, they tend to agree with it. If it's in the basement of a townhouse style, they don't want to do it right away, which, as I said, insurance companies will be a little more lenient for that, but 12 years seems to be the time to change a hot water heater.
All right, thanks, Chris. So from talking about something old, we're now going to turn to something new. And Tom is going to be talking to us about cryptocurrency. And Tom, how is that connected to insurance?
Well, yeah, it gets us thinking about insurance. Now, I don't know a whole heck of a lot about crypto. I do have a couple of friends that dabble in it. Scares the heck out of me, so I don't myself. But does anybody, we should have had a poll on here, but I'm wondering if anybody in the crowd has heard of Pink Piggy. If you haven't, you might want to get yourself a Globe and Mail subscription and check out. There was an article in the Globe and Mail recently, I think just February of this year, that talked about this. This was basically what was Pink Piggy. It was essentially a website that was set up. It looked like there we go, Pink Piggy scam. We saw that in the chat. It looked like maybe it was something legit, although I don't love the name myself. That would have been my first clue. But basically, it was something that a couple of boards were convinced by their property management company or their property manager to invest their reserve fund money into this Pink Piggy. Which looked like maybe it could be a bank. They were convinced by the property manager that it was something legit and something that they were eligible to invest their reserve fund money into. But it turned out that Pink Piggy was actually investing the corporation's funds into cryptocurrency. So, as these things go, the boards make their investment. It was supposed to be a guaranteed return. They're getting, really good rate of return on this investment in the early days. And then eventually the fund stops, the money runs out, and they realize, wait, what the heck? Where was our money? So, I won't go too much more into the article. You'll have to read it for yourself. The individual involved is now facing repercussions of that. But really it gets me thinking, as it always does, anytime anything happens, well, how would insurance coverage apply for that situation, right? And it's kind of an interesting one. So, corporations right now, the biggest coverage that corporations carry, not a mandatory coverage, but one that most corporations will carry, is something called fidelity bond coverage, or sometimes they call it crime or employee dishonesty coverage, depending on the policy that you purchase for it. But basically what that does is it protects the condominium, it protects the money of the condominium. So if that money is wrongfully removed by any employees of the corporation, any board of directors members of the corporation, most of the policies also extend that if that money is also wrongfully removed by property management of the corporation, that's when the fidelity bond coverage would kick in. So that's a coverage we could look to. And again, because this case is still in motion, and I don't have connection with the corporations in question on this one, I don't really know how that is necessarily going to play out. But one of the things that a lot of people don't realize is that in many of those fidelity bond policies, and really in a lot of areas within every single policy that's issued, whether it be liability policy, property policy, or crime-related policies, a lot of those policies do not cover cyber events or events that come up as a result of computer activity, computer fraud, computer attack, different things like that. So while in this case you may have a possibility to use the corporation's fidelity bond, depending on how it's set up, depending on exactly what happened and how people were duped. You may have an opportunity to go after the property management company. Now, property managers are required to carry fidelity coverage under the new licensing. Well, not new anymore, but from back in 2017, when managers were required to be licensed, they're required to carry fidelity coverage. But do you know how much they're required to carry? There's no specific amount. They just have to carry the coverage. So it's up to each board. It's incumbent upon each board to take a look at their management agreements and, hey, how much does my property manager carry of that coverage in case somebody from the management company steals from us? My big thing is I always like to be in control of my own insurance coverage. And so I recommend that to my corporations. You know what? have your own fidelity coverage. But what about all this other stuff? What about this cyber stuff that's happening? And cyber became a big, buzzword in the insurance industry. And if you guys remember, back when there was what some of you called an insurance crisis and prices were climbing and that kind of thing, that was more so centered around the property insurance. But one of the things that we saw in the industry as well, not so much in condominiums, but generally in insurance, was that cyber-related insurance was experiencing a massive increase in pricing as well. Believe it or not, cyber insurance, you remember COVID? We were all stuck inside. Everybody was working online, sort of, figuring it out as we go. The cyber insurance loss ratio for the entire industry at that time was 1,000%. It was over 1,000%. So for every insurance dollar of cyber premiums that the insurance companies took in, they were paying out $10 for every dollar they took in at one point in time. Because you remember, there was all sorts of scams that were happening all over the place. So that's settled down a little bit now, but it's still a very real risk for condominiums. And so the whole crypto case, and you got to get Globe and Mail subscription and read the article because it is quite interesting. But it really raises that point, what are some other things that corporations, condominium corporations could be exposed to? It used to be that, it was just your very big companies that were getting cyber attacks on them, Yahoo and MGM and all these big companies. But now we see that it's happening a lot more frequently to all sorts of individuals and corporations, including condominium corporations. So what are some of the key things that condos could look for and talk to their insurance broker about from a cyber standpoint, make sure that they're protected? One of the things we see is something called, that it's very similar to this case, might actually kick in this crypto case, is something called social engineering. And really what that is, it's where you get duped or where you get tricked. So somebody has tricked you into sending money into somewhere it wasn't supposed to go, whether they do that by phone, through electronic means, email, computer, otherwise. It's basically criminal deception. Right? That essentially causes you to send money where it's not supposed to be, and then all of a sudden that money's gone. You can't get it back. So there's coverage available out there, more commonly in the industry called social engineering or criminal deception coverage. Something else that all sorts of clients, insurance purchasing clients can see, including condominiums, something called cyber extortion. Basically where somebody through computerized means gets into your system, whether that be the system of the property manager, whether that be some sort of condominium management system that you employ, whether it be an on-site computer that the property manager utilizes and stores the data within that. Somebody gets in and they basically take your data and they hold it for ransom. So you've got to pay them a certain amount in order to get that data back. Usually they want it in cryptocurrency. So basically what you can purchase is some coverage for that as well, where essentially it covers the cost of a negotiator to figure out how to get your data back. And it also covers the cost of that ransom payment. We can also see things, computer attacks, where essentially it may compromise the data of the condominium corporation. So records of owners, payment information, payments to suppliers, payments received from service providers and owners, different things like that. It can compromise that information. So then you have a whole difficult time. You've got to restore that data that's been compromised, or you've got to replace it or recreate that data so that the corporation can file all the forms it needs to and continue and carry on and comply with the Condominium Act requirements. So that's something else, computer attack coverage. And then there's also something called privacy breach coverage, where basically the information of the unit owners could become exposed. And we've seen this. We saw, what was the big one? Ashley Madison, MGM had a big thing. A lot of corporations have had this. They hold a bunch of client info or private or personal information of individuals. And if that gets compromised and that gets leaked, there's actually a bunch of regulatory stuff that that individual, whoever was holding that data, they've got to do a bunch of regulatory stuff to make sure that individual's credit and other personal private information is protected going forward. So there's a number of things that are required. Basically, if you purchase a policy or you purchase coverage for data breach or privacy breach, it can provide the corporation with all the tools they need, that if something like that happens, the costs and the know-how of doing it are all handled by the insurance company. So really, the pink piggy situation brought up, a whole lot of interesting discussion for me. It's something that we haven't seen, admittedly, we haven't seen a ton of that condominium corporations have faced, but we're starting to see different situations here and there with condominiums and also with property management companies in the cyber realm of things that they're exposed to or things that have happened to them. So my takeaway from this would be, it would be very important for condominium corporations and property management professionals to work with their insurance provider and look at cyber coverage. Do I have it? How am I protected? What are some of the risks, and how can I guard against those?
Thanks, Tom. So thanks for connecting the dots between cryptocurrency to cyber to insurance. Some very good tips there, and things that we do need to think about, especially this day and age. So we are sort of at the end of our presentations from our speakers on our panel, but we do have a few questions that I'm going to throw out to the panel, and we're going to try and get them answered. The first one, and maybe Tom, while I've got you sort of still on the screen, maybe you can try to tackle this one first, and anyone else that wants to add some comments in, we can do that. The question is, and this is, I think, probably coming out of the ice storm situation we had earlier this year. If a tree on a condo's property damages the neighbor's building, whose insurance covers the cost of the property? And I'm just going to add on to that question. Does it matter if it just happens, or if it's as a result of some kind of natural event like an ice storm or a windstorm or a tornado? So Tom, do you want to start us off on that?
Oh, yeah, for sure. I guess, first question was, was anyone around to see it? That's how old tree falls in the woods, right? But what happens in that situation, really, in my experience, is that, condominium insurance is purchased for your condominium property. So if a tree falls on your property and damages common elements or the units or property that the condominium corporation is responsible to repair after damage, then you, the one who suffered the damage, has potentially got to trigger your insurance, and you would be responsible for the cost of that damage. Again, if there was a situation where perhaps there was some negligence on the part of the other condominium who was responsible for that tree, maybe your insurance company is going to pursue that other condominium corporation and try to recoup some of what they've paid out in it. In practical terms, likely not going to happen, especially when you're dealing with an ice storm situation. So again, the condominium corporation, in my experience, that suffers the damage is the one that may have to trigger their insurance. The interesting thing with trees as well is that the coverage under all policies for landscaping and trees is basically what's called on a named perils basis. So that means that if that tree is damaged, it splits in two, and you've got a 40-year-old tree that's destroyed in an ice storm, your insurance coverage is not actually going to pay for the replacement of that tree. Now, if that tree splits in two and lands on your building, the insurance is going to pay for the repair of that damaged property.
All right. Anyone else on the panel want to add anything to that question? Yeah, Tricia?
I agree entirely with Tom's response. And it's also important, and a question that I answer often is it doesn't matter who caused the damage, it matters as to what is damaged. So, our insurance policy, let's say I'm part of a condo corporation and we're experiencing an ice storm, and our tree, which is 40 feet tall, lands on the neighboring property. That's a single family home, not related to the condo corporation. Our insurance company isn't going to pay to repair that person's home that's been damaged by our tree, especially considering it was an act of God, or however you want to put it, a natural disaster caused, something out of our hands caused the damage. Often we hear, why do we have to be involved in an insurance claim if we didn't cause it? This is one of those situations. We didn't cause the damage. Our tree did, so we are responsible to remove that tree and pay for it to be removed from our property. But we certainly aren't responsible for the damage to that building. That doesn't mean that person, that homeowner isn't going to come back and say, "What are you going to do for me? Your tree wrecked my house." But our insurance policy isn't immediately triggered.
Thanks, Trish. Anyone else, or should we move on to the next question? Don't see any hands. Okay, let's go on to the next question. There was a question, excuse me, about the fact that condominium managers are required to obtain multiple quotes, usually under their management agreement, but with insurance companies not having as many people to sort of reach out to get those quotes, and the limited number of carriers that are covering condominium corporations, it's getting hard to obtain these bids and quotes for insurance companies. Does somebody want to jump in and explain if this problem has improved? We have heard today from some of you that there are more people sort of in the market now wanting to insure condos, but what are you seeing in relation to condo corps being able to get multiple quotes for insurance?
Sure, Sonja, I could speak to that.
Yeah, sure, go ahead.
So, 4 years ago, it was more difficult to get other quotes, and boards would say we need 3 quotes. We need to do our due diligence. So, rather than send it off to a number of insurance companies, I would just have to reply that this company would decline, this company would decline, and this company would decline, and this company would be twice what you're paying. So what we have at the moment is the best that's offered. That's not happening anymore. Now we can get multiple quotes now that more insurance companies have entered into the condominium insurance market. So it was an issue in the past. But now, unless it's a very large corporation, very large corporations can be a challenge because, we might put 12 or 14 insurance companies on it to insure it. That doesn't leave many other insurance companies to go to get alternative quotes.
All right, Sandy, you had your hand up. Do you want to add something?
Yeah, I do, Sonja. Just it depends how a brokerage is also set up. Some brokers have exclusive contracts with various insurance companies, so that what that does, it doesn't allow for any sort of crossing over of insurance markets. So we might have, a handful that we deal with and we have contracts with that maybe Tom's firm or Chris's firm does not. So there are more insurers in the market for sure. But I think what it's allowed is for different brokers to have different contracts so that there is no issue with finding capacity on a corporation.
Right. Here's a good question that just came up. How important is it to do insurance property assessments every 3 years? And how does this affect premiums? So who wants to take that one on, and what are you experiencing?
Okay, I can take that one on. I think we've seen over the past several years that the cost of things has changed. We've seen lots of inflation. We've seen the cost of building materials go up for lots of different reasons. This global impact thing is coming back around into the conversation. We see, we see conflicts on other parts of the world, and it impacts the cost of our materials. And it is in fact impacting them still. So, we've seen, and I know that my colleagues here that do the same role that I do, that we've seen some corporations get an appraisal and it's gone up substantially, 15, 20, sometimes even more percentage than that. So it depends on the type of corporation that you're in, I believe. I would always say that once every 3 years is kind of the minimum to get an appraisal done. And the reason being that you are a condo corporation, you are a board of directors, and it's your due diligence, part of your due diligence to insure to value and to provide replacement costs, which isn't partial replacement cost. It's 100% replacement cost value, and some sort of proof or evidence as to how you obtained that value. And another reason it's important to get it done regularly is the costs of things change. They fluctuate, and we don't want you over-insuring. It doesn't help us to over-insure you. If your building is insured for $20 million and you have a total loss and it only costs $18 million to replace it, they're not going to give you $2 million for your pocket, right? They're only going to pay out what your property was, what it costs to replace your property. So the bigger the number isn't always better. The right number is the most appropriate.
Thanks, Tricia. And I think we're going to wrap up with this last two questions that came in, but they are kind of connected. And Tom, I think this is coming out of your discussion. So I'm going to bring it over to you first, and then anyone else that wants to add a comment can. But it has to do with insurance coverage for legal expenses. So one question is it important to add that type of coverage? And then the other question is, given that CAT does not generally cover legal costs, so for anyone that doesn't know what CAT is the Condominium Authority Tribunal, and the premise of the way they operate is that nobody gets legal costs except in exceptional circumstances. So the question is, should condo corps be using their legal expense insurance to cover the costs that they're incurring for CAT cases? So Tom, what are your thoughts?
No, it's a great question. I mean, there's, sometimes people get confused. There's legal expense insurance coverage, which is, available to condominiums, and they already have legal expenses covered for, slip and fall events and that type of thing under their general liability. And they've also got legal expense coverage under their directors and officers for allegations of financial loss and that type of thing. But the legal expense insurance, which is available through a few different insurance companies for condominiums, it's really sort of something different. So it's something that can be valuable for corporations for a lot of these sort of smaller nuisance and negligence type of issues that they have to deal with. Disputes with unit owners, disputes with service providers and suppliers to the corporation, and definitely some of those policies will cover those condominium authority tribunal actions as well. So important to talk to your broker about that and whether or not your policy encompasses that. But that's something that they can cover. So if a corporation does want to put its best foot forward in a tribunal action, the best way to do that is legal representation. And we've had this discussion, I believe, on another panel here before. I don't recommend property managers to represent condominium corporations at the CAT tribunal, because it is a quasi-legal realm. And really, so for a corporation to put their best foot forward, they should have some sort of legal representation.
Thanks, Tom. Anyone else want to add in a comment or two on that topic, and then we'll wrap things up?
Sure, I will. Just that when you use the legal expense insurance coverage, it's a separate policy from your property and general liability policy. So you don't need to be afraid to use it. Using your legal expense coverage for costs that are associated with an event happening within your corporation isn't likely to impact your property and general liability renewals, right? We're not looking at the losses that are related to your buildings. We're looking at the losses related to the legal expenses that you've incurred. So, I mean, if you're going to use it 16 times, then yes, that might actually impact the overall view of your corporation as a risk. And but it is a separate policy and it's rated on its own merit. So if you use it, and the premium may go up, but it's not likely to impact the premium of your property and general liability policies.
All right. Thanks, Tricia, for that insight. Sandy, Chris, anything you want to add, or should we just wrap up?
I wouldn't
No?
dare because we have lawyers on the CCI board. So I'm not going to explain how good it is to have legal expense insurance.
All right, Sandy?
Right, I recommend it, that's for sure. I do, for the cost of adding it to your policy. I think well, ours does anyways by the number of units in the condo corporation. That's how they come up with the premium for it. But I think it's a great coverage to have. And as Tom said, it also fills in gaps where the general legal liability and the directors and officers might not cover it. The legal expense is also amazing coverage to have if you want to bring legal action against a contract dispute and also warranty issues. So those are some other extensions on the legal expense.
All right. Well, thank you, everyone. And we're already over past 1 o'clock, so we're over our hour. So we're going to have to wrap things up here. We do have a couple questions that we're not able to answer from the Q&A box, but we did get a lot of them answered. So thank you for putting those questions into the Q&A. It always leads to some interesting discussions throughout the webinar. So thank you to the participants for posting those questions. Thank you to our panel for answering them. And also, I want to make sure before we leave today that we give a big shout out and thank you to Debbie Dale, who is our chat master. She does an excellent job. And when she's not here, I really miss having her doing the chat because she does a much better job than I can. So Debbie Dale, thank you very much for managing the chat for us and making sure the information is getting out to everyone. If you're a condo manager, you've got about another minute or so to get your name into the chat box. Make sure it's your first and last name and the company you work for so that we can record your attendance at today's webinar. And before we leave, there's more thank yous we need to do. And the first one is to thank our sponsors. So thank you again to the sponsors of this webinar: Aaliyah Associates Condominium Lawyers, Nordic Windows and Doors, Select Path Insurance, BFL Canada, and Common Ground Condo Law. Again, your support is so appreciated. And with your support, we are able to provide these webinars free of charge to all of you that are watching. So thank you again to our sponsors. Be sure to check them out on our website by clicking on their logos. And don't forget to also check out our website when it comes to our upcoming events. We have an in-person event that is taking place at the Barrie Country Club on June 11th. Registration is open until May 29th. So if you haven't got your ticket yet, make sure you register because registration will be closing on the 29th. And the topic for discussion at our Brunch and Learn is economic success in condo project management. So all you need to do to register is go to cciharmonia.com, click on our events tab, and then you can click on upcoming events and you'll see that event there. Click on it and you can register right from that page. Also, while you're on our website, you'll see our upcoming webinars that we have planned for the fall. And we have our dates set, so mark them in your calendar. September 19th, we're going to be talking about communication. October 17th, we're going to be talking about Mother Nature's lessons. November 21st is the date for the webinar. Our topic has not yet been confirmed, but on December 12th, we will be having our annual case law update for 2025, where we'll have our condo lawyers present talking about what the courts and tribunals are saying about condos and what's happening in condo land. So mark that date, December 12th. If you miss any of our webinars or you want to watch the webinar again because you weren't able to get everything down on paper that you wanted, all you have to do is go to our YouTube channel or go to our website under the events tab, past webinars. You will be able to find recordings of all of our webinars. And we've been doing this since COVID started, and we've got well over 50 webinars listed and recordings available for you on a variety of different topics. So I'm sure if you are looking for information, that's probably a good place to start looking, and you can watch one of those webinars. Also, in the fall, we are going to be holding 2 more director certificate programs on October 22nd. We're going to be doing course 104, which is enforcement fundamentals. And on November 19th, we'll be doing course 106, which is meeting fundamentals. These courses take place in the evening on Zoom from 6:30 to 8 p.m. If you have any ideas for topics or speakers for our upcoming webinars, you can always send an email to admin@ccihuronia.com. If you want to get on our email list to make sure you know what's happening at CCI Huronia, just ask to be added to our list. And again, just send an email to admin@ccihuronia.com to be put on the list. And don't forget, if you're going to our YouTube channel to watch one of our webinars, please subscribe and help us increase our subscription numbers. And if you are a property manager, this is your last chance. Put your name in the chat box so you can claim your CPE credit. All you need to do is go on to your account with the CMRAO and claim your credit there. We will be forwarding the attendance list to them so that they have confirmation that you attended today. And if you haven't checked out what's happening at our other Ontario chapters, you can go to the national website, cci.ca, to find out what's happening. But here's a brief summary. Toronto is holding their golf tournament on September 11th. You can go to their website, ccitoronto.org, to get more information. Our friends at CCI Golden Horseshoe are holding the condo director course on May 29th, 108, Repair, Maintenance, and Change Fundamentals. And on June 17th, they are holding an event called Summer Socials and Straight Talk, Strengthening Condo Communities. So you can go to their website, cci-ghc.ca, to find out more. And CCI London is holding their golf tournament on June 16th, and Eastern Ontario, which is our friends out in Ottawa, are holding their golf tournament on June 19th. So you can also go to their website, cci-sw.on.ca for CCI London and cci-easternontario.ca for the golf tournament on June 19th. And our national events from May 28th to May 30th is our National Leaders Forum. If you want any more information about that, you can go to cci.ca to register. So that's it for us. And as I said at the beginning of this webinar, we're going to be taking a break for the summer. So we will see you back here in September. And from myself, Sonja Hodis, and the entire CCI family, wishing you a great summer. I hope to see you back on September 19th when we discuss communications in condos. And don't forget, CCI is your condo connection. Have a great summer, everyone.